On March 2, 2026, the financial world stood still. It wasn't a crash that seized the global exchanges from London to New York to Tokyo. It was a single seismic event, a transaction so vast it felt less like a deal and more like a tectonic shift in the very bedrock of the global economy. For months, whispers had circulated through venture capital circles and the highest echelons of Silicon Valley. The artificial intelligence race was accelerating at a pace that defied all conventional models, and at its heart was one company, a name synonymous with the bleeding edge of innovation. Then, just after the closing bell in London, as markets were beginning to settle, newswires flashed a headline that would redefine the technology landscape for the next decade. The alert didn't just capture attention, it commanded it, pulling focus from every other story and market signal. Across trading floors and in boardrooms, conversations stopped mid-sentence. This was the moment everyone had been waiting for, and dreading. OpenAI, the company at the epicenter of the artificial intelligence revolution, had just closed a funding round of unprecedented scale. This wasn't just another milestone for a successful startup. It was a coronation, a declaration that the theoretical future of AI had arrived, and it carried an astronomical price tag, one that would set a new benchmark for ambition and belief in technological destiny. The transaction totaled a staggering $110 billion. To put that in perspective, it surpassed the annual GDP of several nations. It was a figure that seemed almost abstract, a testament to the monumental expectations placed upon the promise of artificial general intelligence. But it wasn't just the sheer size of the check that captured the world's attention, but the names of the giants who were signing it. The funding was raised against a pre-money valuation of $730 billion, a figure that already placed OpenAI in the rarefied air of the world's most valuable companies. Add the new $110 billion in capital, and the post-money valuation settled at an almost unbelievable $840 billion. This wasn't just market speculation. It was a calculated strategic placement of capital on a global scale. That valuation placed OpenAI among the world's most valuable enterprises, built not on past profits, but on the promise of future dominance. This wasn't a bet on a new app or a social network, it was a bet on the creation of a new form of intelligence itself. The capital came from a trio of titans, each a dominant force in their own domain, now converging on the future of computation, forming an alliance that would be nearly impossible to challenge. Amazon, the titan of cloud computing and global logistics, led the round with a $50 billion commitment. NVIDIA, the undisputed king of the silicon powering the AI revolution, contributed $30 billion. And SoftBank, the world's most aggressive technology investor, matched that with another $30 billion. Each investment was a strategic masterstroke, designed to secure their own place in the coming AI-powered world. But this was not simply cash for equity. That's the old model, a relic of a simpler time. Beneath the headline numbers lay a complex web of infrastructure commitments and deep strategic alignments that would reshape the industry for a generation. This deal was about something far more tangible than money. It was about power, electrical power, and computing power, the two fundamental resources of the 21st century. The deal marked a fundamental shift in venture financing. Amazon's investment wasn't just cash, it was a massive, multi-year commitment to provide its AWS cloud infrastructure at an unprecedented scale. NVIDIA's check was inextricably linked to the supply of its next-generation GPUs, guaranteeing OpenAI first access to the most powerful chips on the planet. Capital was now tied directly to the physical and digital infrastructure that powers AI. It signals the dawn of compute-backed financing. In this new paradigm, the investors become the primary suppliers. It's a vertically integrated feedback loop where the money to build the future is provided by the same entities that sell the essential components for that future. A brilliant, self-reinforcing strategic moat that locks out competitors and solidifies the dominance of the incumbents. We'll unpack how this $840 billion reality was constructed, piece by intricate piece. We'll explore the hardware stakes, diving deep into the silicon that makes this all possible and why NVIDIA's position is so unassailable. We'll explore the massive infrastructure deals, revealing the sheer scale of the data centers and power grids required to quench AI's insatiable thirst for energy. And we'll explore a groundbreaking banking milestone that happened the same day, a financial innovation that underpins this entire mega deal, forever changing how the world's largest projects are funded. This is more than a story about a funding round. It's the story of how the very nature of value, power, and infrastructure was redefined in a single day. It's a chronicle of the moment the future was no longer just predicted, but actively purchased by the most powerful corporations on Earth. This is the story of how Amazon and NVIDIA just bought the future of AI. To understand power in the 21st century, you must follow the compute. For centuries, power was defined by land, labor, and capital. Today, a new element has become paramount. Power is no longer just money. It's the raw, computational horsepower required to forge artificial intelligence. The new titans of industry are those who control the digital bedrock, the servers, chips, and networks, upon which our entire future is being built. The $110 billion investment in OpenAI was not a simple venture capital bet. It was a meticulously crafted pact, a grand strategic bargain between the world's most powerful technology companies. It was designed to lock in demand, align long-term interests, and create an insurmountable competitive moat. This was the blueprint for a new kind of vertically integrated empire, built on silicon and software. Amazon's $50 billion commitment ensured OpenAI's immense, almost insatiable computational needs would be met exclusively by Amazon Web Services. This move guarantees a massive, long-term customer for its cloud platform, securing a predictable revenue stream for years to come. But the strategy runs deeper. It's about feeding their own silicon ambitions. By securing OpenAI, Amazon gains a flagship tenant for its proprietary Trainium AI chips. This provides a real-world, at-scale validation environment, accelerating their silicon development at a pace rivals cannot match. It creates a powerful feedback loop. OpenAI's models push the hardware, driving improvements in the next generation of Trainium, which in turn enables even more powerful models. It's a direct challenge to NVIDIA's dominance. Similarly, NVIDIA's $30 billion investment was a masterstroke of vertical integration. It was a defensive and offensive move, securing their position not just as a supplier but as a foundational partner in the AI ecosystem. The company that designs the GPUs powering the AI revolution is now a significant equity holder in its largest customer. This isn't just selling chips, it's co-opting the value chain. NVIDIA gains unprecedented, privileged insight into future AI requirements, allowing them to tailor their hardware and software roadmap years in advance, staying one step ahead of everyone else. This capital ensures OpenAI will build its most critical systems on NVIDIA's next-generation hardware, including the anticipated Vera Rubin platform for exascale AI. This revolutionary architecture features tightly integrated GPUs and a new NVLink fabric, essential for training the gargantuan models of tomorrow. The deal guarantees NVIDIA a lead customer ready to deploy it at unprecedented scale, effectively de-risking their multi-billion-dollar R&D investment. The more successful OpenAI becomes, the more it relies on NVIDIA's specialized chips. This drives a self-reinforcing cycle. OpenAI's success validates NVIDIA's technology, driving market adoption and revenue, which is reinvested into R&D for more powerful chips, solidifying NVIDIA's market dominance and creating a near monopoly on high-end AI compute. This structure, where capital infusion is tied to infrastructure consumption, is the core of compute-backed financing. It's a symbiotic relationship where investment and resource allocation are two sides of the same coin, blurring the lines between customer, partner, and owner. On the same day this deal was announced, a breakthrough in finance provided a glimpse into the ultimate application of this consolidated power. A European bank, with a global payment network, executed the first fully autonomous commercial transaction by an AI agent. This was no coincidence, but a meticulously timed demonstration of intent. It was a signal that the race for AI supremacy is about connecting these powerful intellects directly to the real-world economy, giving them agency over capital flows. The immense computational power being consolidated is the means to an end: the creation of autonomous economic agents, operating at machine speed on a global scale. These agents won't just follow human commands, they will make their own economic decisions. The new rules of power are being written in code and executed on silicon. To comprehend the sheer magnitude of the March 2nd transaction, one must first dissect its financial architecture. Before the new capital entered its balance sheet, OpenAI was valued at $730 billion. This pre-money figure represented the agreed-upon worth of the company's existing assets, intellectual property, and market position. When this new money is added to the pre-money valuation, the result is the post-money valuation. $730 billion plus $110 billion equals $840 billion. For their $110 billion, the investors bought approximately 13% of the newly capitalized OpenAI, a significant stake in what is arguably the world's most important technology company. This valuation is a calculated bet on exponential growth. It's a forward-looking belief that OpenAI's value will not just grow, but accelerate dramatically, becoming an essential utility for the global economy. The funds aren't merely for operational runway or hiring researchers. They are earmarked for a colossal expansion of the company's computational infrastructure, the very foundation upon which future AI breakthroughs will be built. That direct link, money into infrastructure, is what distinguishes this deal. Investors see the valuation as justified because funds are immediately converted into productive assets to secure market dominance for the next decade and beyond. The AI arms race isn't just about sophisticated algorithms and clever software. It's a battle being waged on a foundation of steel, concrete, and raw electrical power. It's about the colossal physical infrastructure that brings these models to life. At the very heart of Amazon's $50 billion investment in Anthropic is a staggering physical commitment. Anthropic will consume a minimum of 2 gigawatts of power to run its models on AWS's proprietary Trainium AI accelerators. This isn't just a cloud contract, it's a foundational pledge to build its future on Amazon's custom silicon, a direct and audacious challenge to NVIDIA's long-held market dominance. To put that number in perspective, 2 gigawatts is enough energy to power a major metropolitan city. It's the output of 2 large nuclear reactors. This represents a colossal, long-term reservation of data center capacity, effectively taking an entire future AWS campus offline for a single client. For Anthropic, it's a multi-billion-dollar bet on AWS's ability to deliver at an unprecedented scale. For Amazon, it's an even bigger gamble that its custom hardware is not just a viable alternative, but is truly ready for the world stage. That 2-gigawatt pledge translates into a vast physical footprint. Entire data halls filled with tens of thousands of server racks, each packed with Amazon's custom Trainium chips. This is the factory floor of the 21st century, where the product is intelligence itself. By securing this capacity, Anthropic has just reserved a significant portion of the world's most advanced assembly line for years to come, ensuring it has the raw power to build its next generation of models. But while the Amazon deal secures a massive foundation for training, it's only half the equation. The partnership with NVIDIA carves out an even larger commitment for inference. Anthropic has committed to building a staggering 3-gigawatt inference cluster, powered exclusively by NVIDIA's next-generation Vera Rubin systems. This isn't just an upgrade, it's a leap into a new architectural paradigm, one specifically designed for the unique demands of running models at a global scale. To understand why this is so critical, we need to differentiate between training and inference. Training is the intense, one-time process of teaching a model, like sending it to university. Inference is running that trained model to generate answers, the day-to-day operational workload of putting that education to use. As an AI service like Claude scales to millions of users making billions of queries, the cumulative cost and power of inference can quickly dwarf the initial training cost by an order of magnitude. When you add it all up, the numbers are breathtaking. Anthropic has also committed to 2 gigawatts of NVIDIA hardware for training, on top of the 3 gigawatts for inference. This 5-gigawatt total commitment to NVIDIA makes Anthropic the undisputed anchor client for the entire Vera Rubin platform. It's a powerful signal that for now, NVIDIA's position at the bleeding edge of performance, particularly for the increasingly profitable inference market, remains unchallenged. Yet, raw gigawatts are only part of the story. The Amazon partnership also includes a revolutionary software component, a plan to co-develop a stateful runtime on Amazon's Bedrock platform. This creates a persistent, memory-enabled environment where an AI model can live and maintain context over extended interactions, remembering previous conversations and user preferences. This is the key to unlocking more complex, multi-step tasks and building genuine, long-term collaborative relationships with AI, moving it from a simple tool to a true partner. Perhaps the most strategically brilliant move is how AWS is positioning its own hardware. In a landmark announcement, AWS revealed its next-generation chip, Trainium 4, will natively support NVIDIA's NVLink fusion technology. This is a masterclass in co-opetition. Instead of trying to replace NVIDIA, Amazon is making its own silicon deeply interoperable with it, creating a unified heterogeneous computing fabric where different chips work in concert. This integration allows for a best of both worlds architecture. An enterprise could run the bulk of its AI workload on more cost-effective Trainium chips, optimizing for efficiency. Then, when a task requires a burst of extreme power or specialized computation, it can seamlessly offload that part to the specialized NVIDIA GPUs within the same system. It's a flexible hybrid approach that maximizes performance while controlling costs, and it could very well become the blueprint for enterprise AI infrastructure for the next decade. On the very same day that the financial world was absorbing the $840 billion valuation, a seemingly separate announcement from Europe provided a stunning glimpse into the ultimate application of this consolidated power. Banco Santander and Mastercard revealed the successful completion of the first live end-to-end payment executed entirely by an artificial intelligence agent. This was not a lab experiment. It was a real financial transaction. Pay my electricity bill. This groundbreaking capability transforms an AI from a mere information provider into an active economic participant. It is the crucial bridge between a large language model's ability to understand a request and its ability to actually do it.